What's going on, everybody? Stocks by the numbers. Welcome back. Wanted to do a quick update here on dwave Quantum Incorporated, ticker symbol QBTS, listed here on the New York Stock Exchange. Company closed $1.14, up 4 cents, about 3.6% on the day, up another cent after hours. Just to bring everyone up to speed, this is a quantum computing stock. We looked at this quite a long time ago, basically about this time last year. Stock recently was on a big, well, not really on a big tear, but, came out at that SPAC level and just really dropped down and pulled back. And I laid out here when we originally looked at it that we could potentially drop down to this 60-cent level. And we can see the stock actually went as low as into the 40-cent range, came back down, kind of retested that level. Then we had a nice bump up, bounce back down, and then we had the big gap up here. This was on February 12th, 2024, and now we've kind of been channeling back downward. So I just wanted to point out a few key levels here, and we can quickly look at the fundamentals. But overall, in my opinion, it seems like the operating expenses, again, this is a company kind of in the early stages, right? In that state of infancy. The revenue's only really growing about a million and a half year over year. And the problem is, it seems like they really need to start chunking that revenue in, tens of millions of dollars at least for the year, hopefully eventually for each quarter. But I think that, in my opinion, people are probably going to slowly sign on for their services and obviously the quantum computers. But I think that once they're really shown the proof of concept and, the increase in efficiency, almost similar to what we speak about with SoundHound, right? Once they see, proof of concept, the fact that everything's getting better, time is being saved, or, they decided to do it this way, but they never would have thought about it without using the quantum computer or something. You understand what I'm saying? So once all of that begins to spread, then over time we could potentially be talking about a much different situation. Right here in this current situation, again, a couple of key levels to watch, but the fundamentals really just need to start chunking in. And right here we have a market cap 144 million, and technically, again, the stock was sub half that, so they've brought this market cap down into like the 60-70 million range at one point. And reason being is because, again, they're just operating at a heavy loss, and technically they could bring the stock down that low. But here, market cap 144 million. We can see the good thing is, though, the company usually beats on the EPS side, and obviously they're posting losses here, but they are technically keeping those losses in check, and more times than not reporting slightly more narrow losses than Wall Street expects. But the problem is the revenue is just slowly trickling in, and technically they're up like quarter over quarter and year over year. But the problem is, again, these losses are still pretty big, and it's just not coming in enough, right? If we look at Q1 of 23, 1.58 million, cost them almost 25 million to do that. But if we fast forward Q1 24, you can see now revenue's up to about 2.5 million, and you can see the net income now that those losses are up about 30%. And now net income sitting here at minus 17 million. So this is what I mean. They're trying to limit their losses, but the problem is the revenue really needs to start rolling in. And if we can get to a point where even 8, 9, 10 million for the quarter, hopefully those losses are going to become even more and more narrow, and then people are going to start forecasting, okay, if they keep this trajectory and then if they maintain this contract, then, in 2 years' time, the company should be worth this and the stock will be here. And that's when more people are going to be bullish on it. However, technically, there are a lot of analysts that have price targets higher than a dollar and change right now. But the company recently rallied up here just back in March to almost 2.5, and then it's kind of been channeling down. So overall, from the high and the low here, you can see we gapped up, and I cut this across here, this trend line connecting from the bottom of that gap, February 12th, to the bottom of that candle right there, May 23rd, and just cut that across. And you can see that the stock recently broke below that trend line to this purple trend line, and then actually popped and closed right at this level. So right now it looks like this is the key level that it wants to try to hold around this 114, but also it came down to this 109 level yesterday, and then it had a bounce back up today, up 3-4%. So it looks like this 109 level is also a key level to watch. We kind of are trumpeting but also from the gap up, it looked like we kind of formed this descending triangle. So now we had the break, right? But it tried to bounce off the 109 level. So for all we know, it can continue down. And this is basically the main support trend line that you have to watch. And let's say just over like the next 2-3 weeks, if we immediately drop down, you can see we're looking at about 90 cents, maybe 91 cents potentially. And this trend line here, this is going from the all-time low. This was back on May 8th, 2023, and coming up, and you can see touching that low right there, November 9th, 2023. And that's just cutting across there. So that technically is kind of like the all-time support trend line that the stock obviously bounced big off of, came back and retested, shown some life, tried to pull back again, had another big pop, right, slowly pulling back. So here is the level again that, in my opinion, you really have to watch this bottom trend line coming up across. And if we do break something like that 90-cent trend line and they really want to beat the stock up, you might come back to the 60s or even the 50s, because technically, again, the fundamentals really aren't there. Now, I know the debt jumped up recently, and I know the company had a decent amount of cash on hand here back Q3 23. You can see over 50 million in cash. Debt went from 33 million up to over 70 million, and has basically been holding around that level for the last couple of quarters. But what I wanted to show you is the cash itself, right, has gone from 53 down to 41 million. As of last quarter, 27.3 million. Now, last quarter that they just reported earnings, they lost about 17 million. Right? So if we do some quick little arithmetic here, technically the company really only has enough cash for like the next 1 to 2 quarters. Right? Which is why, in my opinion, you may hear about some potential cash raises inside of the next 3 to 6 months, because obviously they're going to try to keep their doors open. However, some metrics are technically heading in, the right direction. We can see something like the free cash flow for last quarter down here, 12.42 million. This time last year, minus 13.64 million. So some of these numbers are heading upward, and again, technically the company beating on those on the loss side, and of course losing 24, 26 million, now losing 16, 17 million. Definitely much better. I mean, obviously it still sucks, but definitely heading in the right direction, right? But even if we say hypothetically, if we 10x our revenue and our cost of goods, and let's just say the operating expenses, as you see, that's what's really killing the company right now. And these operating expenses were over 20 million. Now they're down to about 18, 19 million and change. The problem is, again, the revenue coming in is only about 2 million, right? So inevitably we're going to have a loss, but technically a lot of these numbers are trying to climb out of the gutter. But hypothetically, if the operating expenses, let's just say, remains flat, right? We need to like 10x here on the revenue side. And that's when I think all of a sudden the stock is really going to start trending, and everyone's going to be talking about quantum computing, and then everyone's going to buy into the stock because they're going to see the revenue start coming in, and they're going to say to themselves, okay, 2-3 years from now, stock's going to be at $12 or something. But even if we 10x here, again, we're going up to 24, 25 million. Then if we 10x the cost of goods, right, you're looking at about 8 million. So now you're looking at about 17 million gross profit. And you can see the operating expenses, even if they stay in line, would technically still bring us to a negative operating income. However, if people see that that number is consistently getting closer and closer to flat and is going to eventually go black, then that's when the big pumps and the big support are going to come in my opinion. Because if we look at the fundamentals, again, we did this when we originally looked at the company, and we can see that technically we're operating at a negative book value. We have a negative equity, right? Assets minus liabilities yields total equity. We can see we're sitting here as of last quarter, minus 37 million almost. That's the lowest it's been going back the last 7 quarters. And the liabilities recently went from about the low 50 million mark, and now we're up here to the mid 80 million mark. So we had, roughly like a 40% increase. 60% increase, basically over the last couple of quarters on the liability side. And the assets, we can see, jumped up to 70 and have been slowly pulling back. So unfortunately, the assets are dropping down and the liabilities are now staying up. And this is what I mean. This is why technically a company with fundamentals like this, if they do want to beat it up again and break it below that trend line we looked at, all of a sudden you see 70, 60, 52 cents a share. Unfortunately, it's really can't be viewed as an overreaction. Most of these other numbers, obviously, big negative. Gross margin percentage is up nicely. We can see, right? That's what I mean. Like a couple of numbers are good. Overall, it kind of looks crappy, but I think that if they, they need some catalysts. They need the clientele to come in. They need that revenue to start moving up. And they're technically forecasting, it looks like, much more revenue expecting to come in 2025 and 2026. So that's why, again, something like this, I mean, it's trading near the dollar range. It was already sub $1. We got a negative book value, so you could see potential reverse stock splits. You could see more stock offerings, right? Because the company's probably going to need cash. So this is why, just fair warning moving forward. This is a situation that can absolutely get extremely volatile and negative in the shorter term before it really potentially begins to grow and becomes a name in the space over the longer term, 2-3 years from now. But, technically gross margin moving in the right direction up here above 67%. That's the highest it's been the last several quarters. Operating margin, right? We looked at some of these numbers before. We were over here minus 900, over minus 1,000%. Now we're here minus 500, minus 700%. Again, still not good, but technically moving in the right direction. EBITDA minus 550, minus 690%. We were same thing, minus 870, minus 1,200%. So some of these numbers slowly moving in the right direction. And they technically are generating more money right now off of the assets on their balance sheet, even though those numbers are really swinging from quarter to over quarter. So not really sure if we can use that metric right now, but we can see obviously our debt ratios are up, right? Because a lot of the other fundamentals have kind of just sat stagnant, but now we've had the bump up in debt going from 30 million to 70 million. But longer term, again, we can see these were the losses I was talking about. We can see the company posted wider losses on 2 quarters over the last 8 quarters. So for the most part, they're trying to keep those losses in check. And you can see over the next couple of quarters, basically expecting to remain flat with where they are right now for the most part. That's why if we speculate continuing to lose roughly 17 million a quarter, they have 27 million on cash. It might only be in the next quarter or two before they have to raise some more cash. But here on the revenue side, we can see this is the real issue, right? This is the real issue. People want to see the beats on the revenue side, and they want to see, a more impressive growth, if you will. And, now they're expecting, it looks like about a 20% growth from what they reported here, 247, now estimates of 282 for next quarter. So that's what I mean. Now next quarter, if the company comes out and posts like 2.5 and they miss again, then, technically the stock doesn't really have to start moving. That's the point I'm trying to make. But if they can get to later numbers earlier, this is why I'm saying in my opinion, they need a catalyst to come in. They need a new client to sign up, right? They need some revenue to come in. And if they're able to post like 3.5 million on this 2.8, right? Then you're going to see a pop. Estimates of 3.3. They come out, they post 3.75. Boom, you're going to see another pop. Even though the company is still operating at a loss, right? Because we see the trajectory that we're on here. Yeah, losses are remaining in check, but the company's not making any money, so any short-term pop that we see off of the narrow loss is going to immediately be given back because the company really isn't growing that much. But technically, these numbers are up year over year. We look at Q4, they brought in 2.9. They missed estimates by a chunk, but they brought in 2.9 the year before they brought in 2.4, right? Now we have Q1. This time last year, 158 million. Now they brought in 247 million. Even going back too, right? Q3, 256 million. The year before was 1.7. So technically these numbers are going up year over year, but it seems like it's literally like 1 or 2 sales year over year. And yeah, it's unfortunate again, because if we look at these annual forecast numbers, we can see 2025 expecting 25 million, and that's for the year, right? That's for the entire year. So if the company maintains these losses, they're bringing in 25 million, and then I tell you, yeah, a company like that, is worth 130, 150 million. That might very well be in line with, what Wall Street might feel is quote unquote fair value for this type of company right now. So that's why even going out to 25, let's just say they bring in 25, 26 million, it might not necessarily be enough to really drive up the price of this stock. going out to 2026 now, if they jump up to 64 million, now we could potentially be talking about a different situation, which is why, I just wanted to look at the light revenue numbers coming in, even though they are growing, and I wanted to point out what the company's forecasting a couple of years down the road. Because if you're involved in this one, or you wanted to think about getting involved into this one, again, you may potentially be looking at reverse stock splits, you may be looking at some cash raises, and also you may be looking at, 2-3 years before you really start to see a growing business and a successful business. But yeah, it looks like, again, that 109 level where we gapped up from, it looks like the stock just hit that yesterday and then had the nice pop back up. This is the last time they reported earnings, and we can see we bounced around. So we're kind of in this descending wedge, but we have to see if if it gets back above this 114, 115 trend line. But then we have to look to see if it holds this 109 level, of course, which it just retested. And then if it breaks that level, again, you may see about 90 cents down here. So in the shorter term, it does seem like you have a lot of hurdles here with this stock. But trying to come out with some news here. dwave extends collaboration with Aramco. dwave joining the Russell 3000, right? But again, that doesn't necessarily mean it's going to be a winner. dwave maintain price target 250 by Needham. Boost quantum processing, drive customer growth. And we had earnings here. Let's just see. 250 price target. Reported 2.5, expectations of 3. Management reported bookings of 4.5 million, which represented a 54% increase year over year relative to 23, right? This is what I mean. Like, technically, the revenue is going up quarter over quarter, and for the most part, and, year over year. But again, to go from 6.7 million up to like 7.5 million year over year, it's just, it's not enough to show value, in my opinion, to Wall Street, especially if you're losing, 18, 20 million a quarter. But overall, he also highlighted dwave, significantly accelerates quantum processing speed since its launch in April. More than 530,000 jobs taken advantage. Okay, very nice. Yielded 4,800 qubit processors for its upcoming Advantage 2 system. dwave renewed its multi-year partnership with USC, right? Projected second quarter revenue 2.8 million. Benchmark analysts maintain buy, price target of 4. So people are seeing value here, but only because I think, in my eyes, they're just hoping that these big sign-ons, these big catalysts do come into the stock. Piper Sandler reiterated overweight rating, price target of 3. Pleased with the strength and traction. Company continues to outpace its competitors. Only company with a commercial model in the quantum industry. Substantial increases in the company's customer portfolio. Highlighted this once again. Okay, projected second quarter. Yep. So this is why everyone's still kind of bullish on it. But again, in my opinion, I think they're just kind of hoping that the big news hits. Some company comes in and, gives them like a $10 million contract or something. And all of a sudden now the revenue is there significantly more, right? It just jumped up several 100% or whatever. That's what I think the company is waiting for. But again, right now, in my opinion, even if we have these pops and we go from 114 up to 1.5, and then it bounces back down to 1, and then goes back to 1.5, like, yeah, you can probably trade it and make money on the ups and the downs, on those pops and those drops. But overall, again, in my opinion, the revenue really needs to start coming in for this company to see some value. And also, in my eyes, that cash burn is the real red flag here. Because, again, losing 16, 17 million a quarter, you got 27 million on hand. Something's got to give over the next 1 to 2 quarters. Something's got to give. But for the most part, it does seem like a lot of analysts are basically holding their buys. You can see maintain a buy at Roth, buy at Craig-Hallum. Price target from 175 to 250, maintains buy rating. Right? So this is what I mean. Everyone, I think, is just kind of waiting for, like, boom, that one big order to come in, and then we're going to see more value. But unfortunately, with these companies, it's hard to time. It's hard to know. Because until that news hits, the company's losing tens of millions of dollars, and the stock can consistently go lower if it wants to, right? So that's why. That's what makes it so difficult in this situation. But RSI down here on the daily at 37. Hit that bottom Bollinger Band, had a little bounce. Again, also hit that 109 trend line. MACD recently crossed to the upside. Today's little pop kind of potentially curled. It could be heading back to the upside. Let's check the weekly real quick. RSI 43 recently broke below the 50-day moving average. And again, we potentially had a descending triangle, so we had a big breakdown here. MACD's just been slowly kind of slipping for the last couple of months, and bottom Bollinger Band on the weekly, 87 cents. And what was that bottom trend line? About 90 cents. 91 cents. So, I'm not saying it's definitely going to happen, but if it does happen, in my eyes, you can't really be too shocked by it. Let's check the pivot points real quick. I'll let you go. We can see, we had a pivot point here at 149. The stock recently chunked below that. And here on the daily, we have pivot point here at 111. So, right, we have levels of 109, 111, and right here where the stock closed, about 114, 115. So the stock right now is in between a couple of levels. So we have to see now, is it going to bounce and keep running and try to retest, get back above this 200-day moving average, 121, or is it going to dance around for a few days and then end up rejecting and drop down to the lower ones? But what was this previous level here? About 103. So, that might be the low of the low, but yeah, quantum in the short term, and we can see, even from when it got listed here in 22, we can see that technically we're making lower highs. It does seem, if we go from like here, it does seem that over the longer term, we're kind of in this long-term symmetrical triangle now, right? And symmetrical triangles technically mean, it's not a bullish or a bearish indicator, and stock could either break up or it could break down. And if we come out to our apex here, as you see, we're looking at maybe about 6 months from now, tail end 24 going into 25. And that's why I'm saying, in my opinion, over the next couple of quarters, if they run out of cash and have to offer more shares, or if they just don't get that revenue, that order that they really need, then in my opinion, it's probably going to break down as opposed to break up. But, just like we saw with ASTS, right? We can potentially see no value in the moment. The timeline was delayed. We might have a couple of months, but then boom, all of a sudden we get news. Oh, this person extended the contract. This person made an investment, right? So we might get here at the apex, and with no news from the actual business, all of a sudden you could have anything happen, right? And someone, who knows, Carl Icahn could make an investment or something. So we know what can happen, but I just wanted to point out a couple of key levels here. And I wanted to just double check the fundamentals real quick, but probably already went on for too long. But I'm going to end it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that these markets are rocky. They're volatile. They're very uncertain. They're hard to time sometimes. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for your time. You guys have a great weekend.